Welcome to this episode of Living in Tucson, your Tucson Real Estate Connection. And in this episode, I'm going to go over the Tucson Housing Market Report for November 2022. Hot off the press, the numbers are out, and I'm going to go over the Tucson Housing Market Report. This episode you don't want to miss because there's some interesting things happening here in the Tucson housing market. So let's dive on into it. Hello, my name's Tyler Ford, Tucson, Arizona with eXp Realty, and I just want to thank you for watching this episode. Those that are subscribers and watch my monthly market update each and every month, I just want to say thank you. And in this episode, I'm going to cover a few other key indicators that I don't normally cover, but we're in an interesting market. And although things are slowing down, I'm somewhat surprised and baffled that home values haven't pulled back more than they have. I still think we're going to get a bigger pullback, but inventory levels, although they're up, they're not up enough to have more supply than there is demand. So we haven't seen a huge pullback in price. And in my opinion, the big eye opener for me, which I'm going to cover, is closed transactions. And volume is way down by about 50%, which I'm going to go over. But in a normal market, we have anywhere from about 1,000 to 1,500 closed transactions. We're off that by about 50%. And I think the big reason, a couple things, is people are what I called rate locked, meaning interest rates have more than doubled this year. And so a lot of people are locked in at, let's say, a 2.75% to 3% interest rate on a 30-year fixed. And if they get off that rate and go buy a home that's more expensive, they're also going to be subjected to the higher interest rates, and their payment's going to more than double. So people are just staying put. And although there's more inventory, there's just not enough to really start to drive prices down. And it's about supply and demand, which I'm going to cover. So again, going to go over a few other indicators, and I hope you get value of this video. And again, I really appreciate you watching. The first thing I want to cover is interest rates, and the Feds have been aggressively raising rates. This is the most aggressive that the Feds have been in the history of the U.S. in terms of rate hikes. The amount of time and the amount that they've gone up over the last 6 months. And it's starting to have a huge impact. It's definitely slowing down this market in terms of inflation and also housing. And the Feds are trying to put the brakes on to slow down inflation and curb inflation. So as a result, interest rates have more than doubled. So interest rates right now, as of this recording, on a 30-year fixed, you're looking at 6.33%. And on a 15-year fixed, you're looking at 5.67%. And we've had a little bit of a pullback, so we're not at the highs. The high on the 30-year was about 7%. So we're down about 0.75% from the high. And one thing that I'd like to recommend, and this is, if you can afford it, again, home values have gone up and also interest rates have gone up. But one thing that's worked well for my wife and I is if you've got enough money to put down to get a 15-year fix, not only are you going to get a lower rate, you're going to save a ton of money on interest. If this market pulls back even more, a 15-year fix can typically keep up with the declining market, meaning that the amount that you pay towards principal will keep up with the declining market. So again, I know a lot of people can't afford a 15-year just because your payment does go up, but if it's something that you can afford in terms of putting more money down to make that payment affordable, I would encourage you to look at a 15-year fix versus a 30-year fix. Take a look at the amortization schedule and look at the amount of interest that you will save, and at the same time, it's more of a peace of mind, what I call sleep factor at night, knowing that, if this market pulls back even more, the amount of principal that you're paying into your mortgage is going to keep up with the declining market. The first number I want to dive into is what we call percentage of list. And that is when somebody lists a home in the MLS, what percentage of the list price are sellers getting? And in a normal healthy market, percentage of list is anywhere from about 92 to 97%. For the last 6 to 8 months, percentage of list has been at 100% or slightly higher. So percentage of list is finally coming below 100%, and it's much more of a buyer's friendly market. But one thing that I want to talk about and emphasize, especially if you're a seller out there, you want to be looking at comps right now because the market's changed so quickly, of closed sales that are really 30 days, maybe 60 days back at most. But pay attention to the active listings and the pending listings in order to get the average dollar per square foot in order to help you price your home correctly. But the biggest detriment to a seller is pricing your home too high out of the gate. It's going to sit on the market. I mean, I've got quite a few agents in the office that have clients that are unrealistic in terms of price. They price their home too high and they're not even getting any showings. So again, you want to price your home correctly. If not, it's going to sit. The longer it sits, people begin to wonder what's going on with this home. Why isn't it sold? And it actually will end up getting you a lower price, especially if this market continues to decline. You're just going to chase that down and you're going to end up getting less than what you could have received. So really, really important to price your home correctly. So with that, so percentage of list for November 2022 for single family homes, 98.4%. For townhomes and condos, it was 98.5%. So sellers are still doing pretty well, but it's a couple percent less than what their list price is. So again, the key takeaway, especially if you're a seller here, price your home correctly. And if you're a buyer out there, there's room to negotiate, which is good because we haven't seen that in a long time. The next number I want to cover is what we call months supply of inventory. And that is if no other homes were to hit the market today, how long would it take for all the inventory to be sold off in the MLS? And that is what is called month supply of inventory. It's more than doubled in the last 6 months. And that is because inventory levels are starting to go up and average days on market are increasing as well, which goes into month supply of inventory. So month supply of inventory for November 2022 for single family homes was 2.4 months or about 72 days. So if no other homes were to hit the market today, all the single family homes would be sold off in about 72 days. For townhomes and condos, month supply of inventory was 1.8 months or 54 days. So if no other townhomes or condos were to hit the market, they would be sold off in about 54 days. So that's it for month supply of inventory in the Tucson MLS. The next number I want to cover is what we call average days on market. And that is when a home hits the market, how long does it take from the time that it's listed until the time that it goes under contract? And a lot of people think it's from the time that it's listed until it actually closes, but it's when a property goes under contract. And for the last year or so, average days on market's been 15 to 20 days. Homes have gone under contract super fast. It's been very frustrating for buyers because they got to act super quick and they've been having to compete against other buyers out there. But that's not the case right now. Average days on market is dramatically gone up. It's more than doubled, and buyers are able to not have to move as quickly, and they've got more inventory to choose from, which I'm going to cover later in this video. So average days on market for single family homes listed in the MLS for November 2022 was 38 days. For townhomes and condos, the average days on market was 32 days. So again, this number is more than doubled, and it's turning more into a buyer's friendly market. By now, you're probably wondering what's home values doing here in Tucson. And to my surprise, home values have been hanging on. So if you're a seller out there, home values have pulled back a little bit, but nothing significant. And I'm really surprised. But again, I'm going to cover the inventory levels. And inventory levels, although they've gone up, the supply is not more than what the demand is. So we still have relatively low inventory levels, even though we've seen them double. So home values are definitely hanging on. And again, I'm pretty surprised by it with interest rates going up the way that they have. And just everything that's going on within the economy. But it's definitely a more buyers-friendly market. But again, home values are hanging on. So home values here in Tucson, the median home sales price for Tucson for November 2022 was $375,525, which is up year over year 7.6%. And for townhomes and condos, 242,000, up 9.5%. But one thing I want to talk about here is for the last couple of years, we saw double-digit appreciation rates. And from January to June, we saw an appreciation rate like around 15, 16, 17, 18%, somewhere in there. And we've pulled back by about 10%. So the appreciation that we've seen this year happened from January to June. And again, I called the top end of this market being June of 2022, and that turned out to be correct. But in a normal, healthy market, homes typically appreciate anywhere from about 4 to 8%. And that's where we're going to land this year, in that range. So moving forward, the question is, will we still see that, or will next year actually see that number turn negative? So time will tell. But again, home values are hanging on there, and I'm quite surprised. But the big thing to look at, which I'm going to cover next, is home inventory levels. And if those dramatically go up, in my opinion, that's what's going to drive home values down. The next number I want to go over is one that I don't typically cover, but it's worthy of covering because people are asking, and it's a great question. And it's as low as I've seen it in a long time. But in a normal market, we're typically well over 1,000 transactions each and every month in terms of closed sales in the MLS, anywhere from 1,000 to maybe 1,500. But again, like I talked about at the beginning of the video, a lot of people are rate locked, where they want to sell, but they don't want to sell because they don't want to have a higher rate, and nor do they want to pay the higher prices. So they're rate locked, and there hasn't been a lot of activity. Things are really slowing down in terms of the volume out there. And in this market, the people that are buying, in my opinion, are the ones that have to, whether it's a job relocation, whether they're having to move or sell, maybe a divorce situation, maybe a probate, an inherited type of property situation. So again, transactionally, things have really slowed down. So closed sales in the MLS for single family homes for November 2022 was 628 units. And for townhomes and condos, we're at 87 units. And that's down by about 50%. So we're off by about 50% of closed sales. And something to talk about here, a big part of our economy and what makes the economy go around is real estate. Because when somebody buys a home, they've got a mortgage, they've got title and escrow that gets paid, you got the realtor that gets a commission, and then you've got moving costs, you've got Home Depot and Lowe's in terms of buying things for their new homes. So as this market slows down, I think it's going to have a major impact over time in terms of the overall economy, which is really going to slow things down. So the big thing to keep an eye on is interest rates. So one of two things would need to happen, and I think it's going to be a combination of both: interest rates coming down, home values coming down, which is going to bring back affordability, which will then start to bring the transaction volume back in line. So again, it's a number that I don't normally cover, but I've been getting this question and just wanted to point that out in terms of units sold is down by about 50% from what we normally are. Okay, my favorite number, and that is home inventory levels, supply and demand economics 101. And over the last couple of years, we've had tons of demand and low supply, which has driven prices up, double-digit appreciation. That's now starting to turn and go the other way, where home inventory levels are going up. Demand going down, which is now starting to pull home values down and slow this market down. So inventory levels, although they've dramatically gone up, we're kind of in a neutral market here where they haven't gone up enough in order to have a major impact in terms of home values. So home inventory for Tucson for single family homes listed in the MLS for November 2022, there were 2,468 homes listed in terms of inventory, which is up year over year 51.6%. So we've seen home inventory for single family homes almost double over the last year. For townhomes and condos, home inventory is 321 townhomes and condos, and that number's up 72.6%. So if you're a buyer out there, the good news is there's a lot more homes to look at, and home inventory levels have definitely gone up. but it's more of just a healthy kind of neutral market, and that's why home values are hanging on, because it's more of a neutral supply and demand. So each and every month I do a live where we dive on into the MLS, and I have an Excel spreadsheet, and I've been tracking it now for about a year and a half. So that's something to go take a look at, and I do a live, but I would encourage you to watch that video, which gives you the history of home inventory since it started to go up. So it's something that I keep a close eye on, and something that I would encourage you to take a look at as well, in terms of having a better understanding and prediction of whether home values are going to go up or go down. If you're one to want to geek out on the numbers, I would encourage you to take a look at the full report. Each and every month I dive into the numbers that I like to cover, but there's a lot more to it. And again, to dive deeper, I'd encourage you to do that. You could head on over to Tucson Homes and Lots, and if you scroll down, you're going to see the Tucson monthly market update. If you click on that, it's going to take you to the blog post that I do each and every month. And if you scroll towards the bottom here, you're going to see a little banner, Tucson housing market. If you click on that, up comes the PDF of the full report. So again, I would encourage you, if you want to dive deeper, to take a look at the full report. Well, that wraps up my report for November 2022. And I've got a lot of clients, and people are always asking me what I think is going to go on here with the Tucson housing market in terms of home values. And I wish I had that crystal ball and I could predict the market. I can't. All you can do is look at the numbers and make an educated decision based on what's best for you. But I do think that the market is going to continue to slow down. I do think that home values will continue to pull back. How far of a pullback we get, I don't know. I do think maybe another 10, 15, maybe 20% at worst is what we'll see. And I'm encouraging buyers just to be patient, keep their powder dry, and just wait unless they absolutely have to buy. So that's just my opinion. If you're somebody that has little to no money down and looking at an FHA or a VA loan, I would encourage you just, again, be patient. Save more money, because at the end of the day, if we do get a pullback and you buy on an FHA or a VA loan, being upside down is no fun unless you've got enough money in reserves in order to weather a storm. So that's just my take on what's going on. I would encourage you to be patient and wait. If you're a buyer, if you're a seller out there, now is the time, because I do think that home values in this market is going to continue to soften. So if you're somebody looking at wanting to sell, now is definitely a good time. I hope you liked this video and found it of value. If you did, do me a huge favor, give me an internet high five by liking it. If you've got any questions or comments, go ahead and comment below. And for more awesome videos about living in Tucson, your Tucson real estate connection, you can subscribe to the channel. You can also hit that bell, and then you're notified each and every time a video comes out. So again, really appreciate you. In the meantime, make it a great day.